Okay. We're going to do the theory of the grade 10 manufacturing revision of, so that you can have a nice understanding of it when you start with the work. Okay. Right. Manufacturing consists out of, well, when we're doing businesses, at school, we look at 3 types of businesses. We're looking at a service concern, like a hairdresser, or a plumber, and then we're looking at a trading concern, like a retailer, or we're looking at manufacturing, for instance, making tables or clothes, etc. That we're looking at from grade 10 to grade 12. Okay. Each one of these has their own and unique ledger accounts and formats that you need to know. Right. In grade 10, when we looked at manufacturing, we actually just looked at theory, terminology that you need to know. Grade 11, we're looking at the ledger accounts, and we're also looking at the production cost statement and their notes. And then grade 12, we're continuing with the production cost statement and the analysis and interpretation thereof. In order to understand the production cost statement, you need to understand the ledgers very well. All right. In order to understand manufacturing well, you need to have a very clear understanding of the difference between perpetual and periodic inventory systems. Okay, so perpetual inventory system, we know what cost of sales is all the time, so I can determine my gross profit at all times. Periodic inventory system, it is only calculated at the end of a period, which means it is not known. In order to calculate the cost of sales, you need to know what opening stock is. Then you're going to add purchases with everything that that may entail. You're going to add carriage on purchases with everything that may entail. And you're going to also add any other costs like customs duties. From that figure, you need to subtract whatever stock you have left at the end of the period. And that will give you your cost of sales. When we did the manufacturing in grade 10, we looked at a couple of terms, and here's some of them. Managerial accounting has got to do with those costs that I'm going to use to build my organization so that I can make better decisions in future. Budgets, it's definitely periodic forecasting based on information that I currently have. Cost accounting or cost accounts is a summary of the different aspects within the manufacturing concern that's going to lead to expenses. Now, you get 2 types of costing or costs. You get fixed costs and variable costs. Fixed costs stay the same for a specific period of time, normally a year, but can stay the same up to 5 years. Variable costs, the more I produce of an item, the higher this would be. Right, let's continue. When I calculate cost of sales in a manufacturing concern, there's 3 stages that we need, or 3 things that we need to take into account. Firstly, we need to take into account my primary cost or prime cost. Then I need to add that to my work in progress stock or WIP, and then I can convert it to finished goods. Right. In order to calculate direct cost or prime cost, I'm going to add my raw material cost or direct material costs, and to that I'm also going to add my direct labor cost. Direct labor cost is all labor that's actually involved with the manufacturing for real. So it's not the supportive staff, it is the people that's actually involved with the manufacturing. Work in progress cost consists out of, or stock consists out of my opening costs, plus my prime cost that we just deduced, plus my factory overheads cost, and then I need to subtract the closing stock from, or the closing balance from that figure. To get finished goods, I need to take the opening, or that goods that I've finished last period that I didn't take into account, plus my work in progress, minus my closing stock. That I now can go and take to my cost of sales. Right. Therefore, for a manufacturer, variable cost will actually comprise 2 components. It will comprise my prime cost as well as my sales and distribution. That means any cost incurred to move the product to its destination. Okay, and as more goods are produced and or transported, this will increase. My fixed cost would be my factory overheads and my administrative costs. That will stay constant for a period of time. As we said, that would be like depreciation, insurance, and your rent expense. Okay, then I've got an example over here where my direct material is 15,000, direct labor is 20,000, which means prime cost is 35, factory overheads is 40, selling distribution amounted to 10,000, administration to 12,000, selling price in totality, or the sales, amounted to 200,000, and my production and selling units totaled to 1,000. Now we're going to calculate my variable and my fixed cost, and then we do that so that we can calculate break even. Okay, let's go and do the example. Fixed cost, we said I'm going to add my factory overheads and my administration together, and that gives me my 52,000. My variable cost would be my prime cost and my sales and distribution, and that gives me my 45. Now we're going to substitute that into my break-even formula. So break-even consists out of total fixed cost divided by the difference between my variable cost from my selling price per unit. It's very important to remember that it's per unit for the selling price and the variable cost. Okay, so total fixed cost we deduced was 52,000, and we're going to divide that with the 200,000 divided by the 1,000, and that figure will be used to subtract the variable cost per unit of 45,000 divided by 1,000. Therefore, I'm going to have 52,000 above the line, and then I'm going to divide that with my 200 minus my 45. Therefore, if you round it off, I've got 335 units. Always give your type of, are you busy with rand, are you busy with units as well? And that is it. Thank you.